Welcome back to Strictly Money. I'm here with Tim Cestnick of Our Family Office. Tim, so when people are dealing with the CRA, knowing that this could be a possibility, could get dragged on, what's your advice?
So I would suggest, first of all, you try to solve any issues you have by having a phone call with somebody at CRA. See if they'll resolve the matter there. If that doesn't work, then you may have to file a notice of objection, and that's really where you need to get professional help, I would suggest. The best thing, of course, Saijal, is to avoid run-ins with the CRA altogether.
Mm-hmm.
How do you do that? Well, first of all, be honest with your tax filings. Don't claim expenses and deductions you're not entitled to claim. That should go without saying, but I'll mention it. Be honest. Next, make sure you keep all of your paperwork, all your receipts, all your supporting documents that support your deductions, your credits, your income, because CRA may ask for it. And if they do, you want to have it handy. And there are maybe gray areas too, where maybe you're claiming something that is, like, for example, maybe you're self-employed and you're claiming a deduction for something that is kind of a gray area. And, an example of that might be where something's partly personal use, but partly business use, depending on your job or your work,
Like car expenses, maybe?
Car expenses may be deductible, yes. And so, but where you've got gray areas, you want to be careful. And I'm not suggesting you don't claim those things. You should if they're legitimate, but just be prepared that you may end up having to discuss them with CRA and may get into much longer conversation and may get reassessed if they don't like your explanations for things. So, understand what those gray areas are. And by the way, there are certain industries that get audited regularly as well.
I was going to ask you, what triggers a possible audit and what professions really have to watch for this?
Well, every year the list of deductions kind of changes, but people who are in the food services business, if you're a waiter or a waitress, unfortunately, you're probably being audited regularly or periodically. The construction industry, cash types of industries get audited quite often, so be aware of that. Also, they tend to focus on certain deductions from year to year. So sometimes it's childcare expenses, sometimes it's charitable donations. It can be moving expenses one year. But when you claim deductions that may be unusual, that you don't claim routinely, just be prepared maybe for questions and make sure you have answers to why you claim those things.
Okay. I want to circle back just really quickly and just, we know that there's cultural problems and it usually starts at the top, as you said, and frontline staff is often powerless. I'm wondering, are you as a tax practitioner being heard? Is this something that maybe MPs need to pay attention to on behalf of their constituents? How do we change this?
It's going to be like turning a very large ship because this is not something that's just changed in the last year or two. It's been a slow change over the last 15 to 20 years. This cultural shift. I do think that as tax practitioners, we need to be more vocal with the CRA about what we think is acceptable, what's not acceptable. Taxpayers need to be more vocal with their MPs. And just say, look, here's what I'm dealing with. This is not fair. If you feel like you've been treated unfairly, let your MP know. There's also a taxpayer ombudsman. I've never dealt with them. I don't know how effective they are. I've heard that they're not necessarily an effective organization. I mean, they all ultimately report to the Minister of National Revenue, who heads up the CRA. So I'm not sure that, I don't know how effective that will be, but there is an ombudsman you can contact to share your concerns as well. I think you need to, not just say nothing. You need to voice your concerns to MPs, ombudsman, and to CRA itself. And hopefully that over time may bring about some change.
Okay. We have about a minute till our next break. I want to switch gears, Tim, because you do provide real tax advice to our viewers. The economy is pretty shaky. Stock markets are down, but I always say never waste a good opportunity, and saving taxes is one of them. Can you explain tax loss selling and how investors can use that? Because I think that's a really key one that we should look at.
For sure. As we head towards the end of the year, you want to think about what things you might do before year end to save yourself tax for this year. One of those things would be tax loss selling or tax loss harvesting, which is taking some investments that you might have that have dropped in value and potentially selling them before the year end. That's going to trigger a capital loss, which you can then offset against capital gains that you've realized either this year or in one of the 3 prior years as well. So if you paid tax last year or the year before on some capital gains, and you've got capital losses this year, you might be able to recover some taxes that were paid in the past. That's a pretty nice thing to get back, is a nice refund. So keep that in mind. And there's some other things that we want to talk about related to losses as well. But that's the first place to start, is look at what's in your portfolio, what's declined in value. Should you sell it before year end?
Okay, and I should remind people this is typically for non-registered investments, right? Where you're taxable.